Opening like this gives, today at least, the opportunity to dip buyers or those looking to kind of sell the market because we're down, what, 70 points, right? 65, 70 points. Will the dip remain bought or there is perhaps one more leg coming? I would kind of go with the latter, that maybe at some point in the day we get some more pressure, at least one leg. We'll see. The big sort of unknown is whether the kind of flows that we're getting, and a lot of ETF money has also been coming, that continues. I mean, that could change the game. But otherwise, I mean, overall, if you look at all indicators, it does look like risk-reward perhaps is a little unfavorable at these kind of levels. 18,114 is what we have. Market breadth, by the way, is exactly 1:1. So at this point in the day, Infosys is down about 1.33%. Hindalco is down about 2.5%. There is Tech Mahindra, which is down about 1.25%, and so on and so forth. Relaxo is down 5%. I mean, talking about some of the larger movers, Nika, which is pulled back from under 1,000 rupees to 1150, is down about 1.5% as well. On the upside, I mean, there is what M&M Finance. I think we already highlighted that. Karnataka Bank started about 19%, ended about 19-20% higher. It's up another 3.5%. Bharat Forge, which we highlighted, the Class 8 truck orders, that's up 1.5%. And Piramal Pharma, which is out of T2T with a 20% circuit limit now, that is up 1.7% as well. Varun Beverages is another one. Super set of numbers recently, 2.5% higher. Reddington, we saw a move yesterday. There is some follow through with about a 2%. So these are things you may want to keep an eye on. MTAR Tech, of course, also reported numbers. That's got about 2.5% in gains as well. We're down about what? Just 60 points at about 18,022.
And this is such a resilient market, right? Yeah. I mean, if someone would have woken up in the morning thinking that it's only a 60-point cut that we'll get away with, I think they would take it with both hands. The bulls, that is.
Oh, absolutely. I mean, it's getting better, by the way. Just 55 points lower now. Sanjeev Prasad is with us, Managing Director and Co-Head Kotak Institutional Equities. Sanjeev, great to have you with us here on the program. Thank you very much. Just put all of the different elements into how you are kind of interpreting the market situation now, Sanjeev. We're coming off this Fed decision and these huge moves last night out of the US. Go on.
A very confusing picture, to be honest with you. Yeah, you have a lot of bad news, I guess, as far as the global situation is concerned. You have a situation where both Europe and China seem to be, headed into a serious slowdown for sure, if not an outright recession. US is probably on the brink of a major slowdown, if not a recession. So far, the data points in the US have still been coming to be fairly strong, which means the US Fed has no option but to keep on tightening. And you saw that, last night it raised rates by 75 basis points and seems to be signaling more rate increases going forward. And on the inflation part, it looks like, inflation is becoming a lot more entrenched than what people have thought earlier. And that's a big risk for, I guess, all markets. Central banks have to continuously be raising rates going forward to bring down inflation. You could have a combination of inflation sustaining for a longish period of time and growth struggling given a period of high interest rates. So in that backdrop, India is doing phenomenally well, I would say. Despite all the bad news, doom and gloom overseas, India continues to do quite well. Valuations are quite stretched in India, but I guess if so much of bad news has still not broken the market, I don't know what will, So I guess people are very optimistic on the medium-term prospects of India, which I think is fair. And in that context, people are willing to probably overlook some of the negative news coming out of the, the developed markets. That's also China. What could break the sentiment? Obviously, if you have a prolonged period of high interest rates and low growth, that will have some rub-off effects on India also. Second is if domestic inflation surprise on the upside through a combination of maybe, let's say, higher food prices and global fuel prices. We still don't know what's the end game of fuel prices when it comes to winter in the Northern Hemisphere. So wait and watch for that. If you see some earnings on straightforward. Yeah, sorry.
Sure. No, I take your point, Sanjeev. I mean, it's a fair point, right? That give and take everything and all the problems that have been thrown at the Indian markets, here we are sitting close to record highs. And I guess another way to look at this Fed news is that now the poison is out of the way. I mean, people know what to expect. It's the bad news that has hit the market and the market has digested it and now moved on, right? What do you think the next trigger could be? I'm asking you from an earnings standpoint because this time, surprisingly, earnings have picked up quite a bit, whether it's banks, technology, despite all the problems have done well. A lot of mid-cap spaces have reported good earnings. What has the big takeaway been for you? And would you raise your Nifty EPS targets for the full year based on earnings?
Surya, the points you mentioned, they are very well known that banks would have delivered anyway very good numbers because A, your loan loss provisions are coming down significantly, and B, you are seeing this lead-lag effect of faster increases in the lending rates compared to your borrowing or deposit rates. So the NIMs have expanded tremendously for the banks, and that will probably sustain for the next 2-3 quarters. The problem is, if you look at numbers versus estimates, they're not that great. If you look at, for example, Nifty 50 index, I think almost 30 companies have reported, and versus our expectations, in fact, net profit numbers are down by about 4.5%, with serious misses on metal mining and case of oil and gas. You had some beats in case of Axis Bank and Bajaj Finance on the financial space. Marginal, beats in case of IT, some of them, although they promised quite significantly. But that's about it. So I don't think we are seeing earnings upgrades from where we are. In fact, we have cut our earnings numbers slightly through the result season. And, if global slowdown continues, I don't think, we have much scope of earnings upgrade. So, the market is very fairly priced, looks like very finely priced, factoring a lot of, good news. So I think we have to be careful about, any further earning downgrades, I would say.
Hi, Sanjeev. Morning. But how do you approach this market then? Which are the themes that still are reasonably priced and maybe for a longer term you will look to get into?
The longer term, I think most things are okay in India. Yeah, if you're taking a 3 to 5 year view, most things will do well in India. That's not an issue. The problem is the starting point when it comes to valuations. We are quite positive, and we have been talking this for about almost 2.5 years now on the whole capex cycle and so on and so forth. But look at the valuation of the capital companies. You have a ABV which is 85 times 1 year forward. Used to be about 50 odd times in March 19. We have seen massive re-rating for all the companies which could potentially benefit from any big capex cycle, which is what we expect going forward. Same if you look at the banks, they're still reasonably priced, I would say, at least the tier 2, tier 3 banks and NBFCs. Presumably the good news will continue over there because we don't see any risk of credit cycle, credit quality, worsening at this point in time. Credit growth looks okay. Could possibly see some pressure on NIM starting to emerge maybe 2-3 quarters later, but that's okay, I would assume. Beyond that, struggle really to find any value in this market. IT pharma looking reasonably fairly valued. You have headwinds of, clearly a slowdown in the US, if not a recession. Most of the consumer names are more than fairly valued, and most are fairly richly valued. Consumer discretionary names are super expensive. So it's just a struggle in this market, to find any decent quality names at reasonable valuations. Barring banks, I really don't see anything at this point in time.
Harish Krishnan of Kotak wrote an article, and I think it kind of gels with the point that you're making, that maybe, Sanjeev, you need to, I don't know if you agree with that, if you're buying at these levels, you need to really be committed to holding for longer term, right, Sanjeev?
Absolutely. If you're buying, let's say, an Asian Paints at 60p, the chances are you will probably not make too much money, at least over the next 1 or 2 years, because the stock would go through a period of derating, especially if the new competition starts to get its acts right. You have Grasim, which is making a big foray in paints, and if you start seeing some market share loss from Asian Paints, which inevitable some amount of compression of both margins and returns. The stock could probably have a period of derating. It's a fantastic company, but buying at 60p, given all the headwinds which are there, I'm not very sure whether you will make money over here. That's the challenge for so many stocks now.
Okay. By the way, just look at M&M Finance, right? 9% higher now and big moves in terms of volumes. It's already a 42% rise that M&M Finance has seen this year, and that's no mean feat. These NBFCs have come back in a big way, Sanjeev, especially the ones that cater to the auto market. And we've seen a blitzkrieg of launches, right? Whether it's in the SUV space, in two-wheelers, in electric vehicles. This whole pocket has gained, but now if you had to sift the wheat from the chaff, which are the ones that still have both growth as well as valuation headroom?
Yeah, I think most of the NBFCs are pretty cheaply priced even at this point in time. If you look at M&M Finance, today it has gone up, but until yesterday was about 1.4 times 1 year forward book. So even if you take today's jump, it will be about 1.5 times, which is still quite okay. Shriram, both the Shriram twins are at about 1.1, 1.2. Clearly undervalued, but obviously there are issues around reorganization of the firm and so on and so forth over there. So we'll see, what exactly plays out, how does the merger, integration, etc. take place. But stocks are reasonably cheap, I would say, as far as NBFCs are concerned. And if you see a decent credit cycle going forward, that is, credit growth. And as I was saying earlier, at least at this point in time, doesn't look like you will see a rapid deterioration in asset quality. We're just coming out of a cycle. And if there are no external shocks, maybe NBFCs have, still a fair amount of upside left.
Well, Sanjeev, since we're talking about the financials as well as the banking theme, I had a two-part question for you. One is on the PSU banks. They have actually, the PSU index has been the biggest outperformer this year from the Indian markets. Do you think more money should be flowing towards that side, or will you stick to the large private sector banks? Point number one. And also, I think in the past, you've been positive on the credit card spends. We had the management of SBI Cards that spoke to us earlier today. Any view on that?
So as far as PSU banks are concerned, look, they are still very cheap, even though they have seen a fair amount of rating over the last 6 months, 12 months. They are still incredibly cheap. You look at Bob, still not at one time price to book. You have Canada at about 0.7. I think both PNB, Union Bank at about 0.5. So I think there's still some scope for rating from where we are. And, the good thing is at least the PSU banks rating on fair amount of deposit base relative to credit. That is, the credit deposit ratios are still very, very low. So at least they don't have this, problem of scrambling for deposits, which some of the private banks will have to, I guess, face going forward, because they're sitting already high credit deposit ratio. You're not seeing deposit base in the country growing the way compared to the growth on the credit side. So at least PSU banks seem to be in a decent position where you could see some expansion NIMs, going forward, and valuations are very favorable. The biggest risk for PSU banks in any side has been, big increase in credit cost at the end of a cycle. I think we're just at the beginning of the cycle, so we should be quite okay on that part. So yeah, so PSU banks look okay. Some people, will never invest in PSU banks, but people who have the appetite at this point in time, valuations look quite favorable, I would say.
Okay, valuations look favorable for PSU banks. I think it's a theme that people have spoken about since Diwali, right? On almost all our Diwali shows, PSU banks was a common theme. Let's see what SBI delivers on Saturday. That will be the interesting bit. It's generally the barometer of what happens in the PSU banking space. But Sanjeev, a pleasure speaking to you. Thanks a lot for joining in on the show. Well, for the market, folks, just look at where we are right now. The dips have been bought, as we were discussing earlier in the morning. The Bank Nifty is now in the green. The mid-caps are well in the green. And this is a market that's not wasting any time to use this global